unicorns. We'll try in this panel shortly to talk very dynamically about unicorns and the role of unicorns in the ecosystem. First of all, there is a research recently by Big Play, which is a consultancy in Silicon Valley, claiming that the IPOs recently done by unicorns have proved to be unsuccessful. That actually the pre-money valuations of most unicorns were hyperinflated and the public couldn't make any money after the IPOs. What do you think?
Who wants to go first? Is it me? Okay, I guess so. I think, basically what we're seeing right now is people are becoming much more aware of that issue, and the way that companies are being valued is much more sane nowadays. It's no longer just, basically a wild guess, but people are kind of looking at comps from the public markets because they know that eventually the unicorns need to get, on the public market. So the comparables are becoming this tool to really understand what would be a sane valuation and then allow the same investor, and sometimes the long-term investors are coming in on some of the previous rounds to basically accommodate that, that difference that they're looking to have once you go public. So I think it's much more sane today than what it was.
But Rafael, here's the question. Many of the pre-IPO investors certainly do have an interest to hyper valuations. It helps them with their portfolio, it helps them also for the future IPO. So they would put few tens of millions just pre the IPO in a hyper evaluated company. How do we actually deal with the fact that most companies are coming to the public market after most of the value was already exhausted or actually gone to the private investors?
So first of all, I want to know the investors that just want to give you tens of millions of dollars at a hyper valuation, because I don't know them yet. So that's number one. And I think that the real, for the public, it's buyers beware. Okay, I wouldn't look at hype. I would look at what the company is doing. I would look into solid business fundamentals. And if there are solid business fundamentals, go for it. Like, I can understand why Uber is hype. Okay, I can understand. But if it's a B2B SaaS company with the fundamentals, it shouldn't be hype.
So, Aviad, let's go to the fundamentals, as Rafi is suggesting. 84% of the companies that went IPO in the technology sector were not profitable before the IPO. If you ask financial consultants before, they would say, you need to have some kind of profit or some kind of significant revenue before you go to the public market. And now we have more than half of the companies coming pre-revenue, pre-substantial revenues. So how can we actually meet the two claims that you need substantial parameters in order to go to the public market and the reality?
So I think there are a few dimensions to that question. First, I don't think that there are many companies that are getting closer to IPO without any revenue. Maybe not profit, probably not profit. But revenue is something that you can see in the vast majority of the companies that are getting closer to IPO. I think the hype in valuation that we see in well-known companies that are getting closer to IPO is mostly related to companies that, as Rafael mentioned, has substantial growth engines, and mostly around the number of users that are using the platform and the addressable market. In these kinds of situation, revenue or profit is a matter of a decision in the long term. So I think that the hype around valuation is not only a hype, it just focused on the potential of the growth and the potential of the future profit of these companies.
Perfect. Let's go to another phenomena which I think a lot of the reporters address now. It's the winner-takes-it-all economy. They tell us before you could have several companies on the same market, either distributed on different geographies or focusing on different customer base, all becoming significant companies. And now we believe that we have the winner-takes-it-all economy. One player actually captures a market segment that creates competition impossible or competition barriers impossible. So what's the way for a company competing in a competitive market? Rafael, maybe we start with you. A very competitive market. How do you think of it in a winner-takes-it-all economy?
So I think the biggest challenge is basically creating a platform in a way that barrier to entry does not exist. So you basically want to build a whole ecosystem that makes your platform, your product successful. So when you think about it, if you think about Salesforce today, are they the best CRM? Maybe they are the best CRM. But if you're serious about building your business around the CRM and you need a lead nurturing system, probably the best lead nurturing system will work with Salesforce. And probably the best lead scoring system will work with Salesforce. And if you're selecting something else, you're going to get stuck.
Thomas, so if it's a winner takes it all, how would you advise actually designing your product so you would keep the competitive advantage, or you would keep differentiating yourself vis-a-vis the large competitor that might become the industry standard?
Yeah, and I completely agree with Raphael. I mean, it's really about the platform. It's really about fostering that ecosystem. That's what makes you really sticky in certain environments. We also, exist in a hyper-competitive market. But there's one thing to be said. I mean, in today's world, at least in our space, and in software in general, the cloud really changed how you consume technology and also how you can replace and change technology. So as easy it is to basically displace an incumbent, it then becomes a little bit easier to also compete with someone, even if you have a dominant competitor in this space. I don't completely agree it's a winner takes all, but obviously some competitors would have the advantage. You can build the advantage with the platform, but it's not forever. I mean, you really have to provide value day in, day out to the customers, so you become that go-to vendor for them.
Aviad, when you have an industry where you have an incumbent, a very large incumbent, and you're coming as an Israeli startup trying to battle with the incumbent. What's the strategy to battle with the incumbent and actually become a significant player yourself that later is ready for the public market?
So in my experience, the way to handle that is to constantly investigating and finding and isolating blue oceans in the market, right? So for example, Sysons exist or live in a very competitive market. There are gigantic companies in the analytics market. It's much like David and Goliath story for us. But I think that throughout the years, we were able to constantly identify blue ocean, a niche that we can excel at. And winner takes it all. If you take it into the niche perspective, you're right. But in that niche, not through the entire market.
So the strategy for a startup would be pick a niche, become the best in this niche, and then actually go public rather than trying to compete on the overall proposition of the large incumbents.
Absolutely. And my friends here are part of the leadership team of very successful Israeli companies. I believe that they're doing exactly the same.
Perfect. Tomer, let's pick for a second, very successful company that also capture a lot of capital and a lot of interest from investors. Let's talk for a second about the SoftBank effect. Or what's the effect of getting this large check from SoftBank? For those of you who are not familiar with this term, Silicon Valley is talking about the SoftBank effect. Unlike the normal VC industry, which would give you checks based on your needs to grow kind of like incrementally, SoftBanks would come with a $50 million, the $100 million check and says, we want you to scale very fast. We want you to show that you can deploy all this capital.
Yeah, and SoftBank did not invest in us, and funnily enough, all three of us are Insight Venture investments. Our last round was 120 million, so I think generally there's appetite to deploy more capital for companies in markets that are sustainably big and over time. So having a very large TAM while you target the niches is incredibly important. Expansion TAMs, incredibly important. And then if you can demonstrate that you've achieved a certain scale, but by deploying more capital, you can do it, and you can do it sustainably. Because we just talked about the pre-IPO phenomena, and one part here is it's no longer about blitz scaling, like if you ask me. I mean, it's really more about trying to sustainably build a business. I mean, you want to scale fast, but you want to make sure to keep profitability in sight. You're not going to become profitable, but it's important to keep it in sight, and it's very, very hard to dial it back down. So you have to kind of keep it all along, like through the process, both scaling fast, but having that cash flow positive target someplace inside, I think that's really important.
There was a very influential article recently in the economic press talking about the deployment problem. And actually they said that investors and companies alike are now being asked to deploy faster. So you come to investors that actually raise their fund and saying, you don't deploy fast enough, you don't invest in enough companies fast enough, put larger checks. And asking CEOs or asking companies, deploy the capital much faster, show me that you can be much more aggressive. And they start becoming a problem because we could scale linearly, but when you scale exponentially, sometimes your company DNA does not fit. Rafael, how do you scale fast when they ask you deploy more capital, go much faster than you were supposed to?
So first of all, it's champagne problems, right? It's not. It's a great problem to have when you need to scale faster. I think it's all. It's not about the amount of money that you have. It's about the product market fit, and is it repeatable? And if it's repeatable, and you have the right metrics, and you focus on the right unit economy, then you can scale very, very fast. Globally, we just opened 6 regions since the beginning of the year. 4 of them are already started to give the returns. But it's really to be laser precise with your unit economy to make sure that you're in the right direction.
You know, we talked about it, but as a company that is leading in analytics, how do you actually analyze yourself, the way you grow? I know that many companies are very good in analyzing others, but internally analyzing performance, analyzing actually how they grow is a problem. Could you share with us the secret how a company analyzing the growth and showing that they are the right direction in scaling efficiently?
So I'm not sure if it's a secret, but I can tell you what we've been doing in Sisense internally. So it's a little bit biased because we're an analytical company, and I'm a big believer in eating our own dog food or drinking our own champagne. So we use our product to manage Sisense, to monitor Sisense, or every part of the operation within the company is being monitored by our own product. I remember that at the beginning, it wasn't as trivial as it's now, which is surprising because, again, we're an analytical company. But early on in the process, we made a decision that we want to be a very data-driven organization because of the mere fact that data today or information today is the new oil. Companies that will not be smart enough to harvest the data that they have will not thrive and scale as quickly as needed. We started a very interesting process. I remember at some point we had a few managers coming in and asking the trivial ask from me. We need more resources. And I remember that at some point I decided to take a different approach. I told them, you know what? You'll get 100 people if you need tomorrow, as long as you'll come back to me with a dashboard, prove me analytically that you truly need the resources. 80% of them did not come back. The 20% that came back, about 8% of them really proved the point, and they got the people that they needed. But the impact of that is the fact that we analyze every step in whatever we do, from R&D, support, customer success, sales, lead generation, and so forth.
You know, as Israelis, we tend to flatter ourselves and think that we're the startup nation, so probably we're doing something very good. But if we look at the analytics, there's actually a troubling data. We see that other countries, which might have started later with the startup industry, actually creating more sustainable scaling companies than Israel. Scandinavia is a good example. They created much more unicorns than Israel in the last decade, and actually they're scaling more companies rather just a few ones. How do you think as Israelis, Tomer, we can do better in creating these large companies and scaling companies?
I mean, obviously you see 3 great examples. I think a lot of it is just the mindset. I think that a lot of young entrepreneurs are kind of starting up and they have very tactical goals in mind. I think just understanding that you can actually create impact at scale from the get-go, and there's a great ecosystem in Israel to do that, and we're getting more and more professional investors, like Insight as an example, but many, many more that are bringing in not only capital, but expertise. I mean, you're seeing centers of excellence that are specialized in helping you scale sales and scale marketing and every aspect of the business. I think that was kind of missing from the Israeli, ecosystem in terms of scale. So, $100 million of revenue and above. Now we're seeing more of that, and I think that allows a lot of people to kind of, at least think through that and then, take that knowledge and apply it.
Rafi, we tend to see that Israeli companies are too focused on very few target markets. The US, a little bit in Europe, but we're too focused in very few markets. One of the statistics shown for companies pre-IPO that they are much more distributed in the way that they actually get the revenues. How do we get Israeli companies to penetrate other markets? So what's the way to build channels, not in the immediate target markets, which will limit your income?
So I can tell what we did. We started with English speaking, so we didn't start with North America only. We started with all companies that are English speaking. And then from there, we took it to countries that have very, very good English, where it was easier to go. And now we're going for all the exotic languages. We look at we see ourselves as a global company, and we want to be within 2 years at about 40% global and 60% North America. Currently, we're 25% global and 75% North America.
Aviad, the question for you. There was a period of time we were all excited about the Chinese market, and Israelis were rushing to China. Now the Chinese market seems a little bit too close to Israeli companies, and I think we see more fragmentation of the markets. How do we deal with the fact that actually one of the largest markets is still a puzzle for us as Israelis?
So we actually tried. We had a tryout on China a while ago. It wasn't successful. And we decided to postpone our efforts in China. Instead, we invested heavily in other regions that we feel that are more comfortable for us or suited better for us to penetrate. So we opened offices in Europe, in Japan, in Australia. As Rafael mentioned, we started to focus on the English-speaking countries, and then the English or the more related to English countries as well.
Tom, I think that in your market, certainly China is less of the target market. But how actually we enjoy the growth of interest in technology in the Asian market to grow the Israeli companies?
Yeah, I mean, obviously with us, China is a no-go. I mean, it's a complete pass. We're in cybersecurity, and China is basically kind of the adversary of everybody that we sell our software to. And China is, it's kind of, I don't like using the word enjoy, but they are a catalyst, obviously, to a lot of the cybersecurity buys in the world today, and that's applicable to countries that are getting targeted in the Asia-Pac region and obviously the US as well. But much like Rafael, it's like 75% of our revenue comes from North America and then 25% rest of the world. It's just, I think sometimes the early adoption of new technologies, the ability to kind of consume new technologies is much, much better in the US than other regions. So that obviously has an effect.
Rafael, the question for you. Israeli companies are normally being praised for the technology, that they have technology excellence, but we are rarely actually praised for the performance in terms of creating a sales machine. How do we start being not only the technology companies, but the sales machine?
So first of all, I don't agree that this is the case anymore. I think that the performance marketing in Israel is very, very good. It evolved because of device industries, so gambling, etc., that weren't allowed in the US, so it allowed Israel to really flourish there, and we have huge talent there. I think that the internal sales models in Israel are much more sophisticated than the ones we see in the US. WalkMe knows how to sell a 7-digit deal without meeting the customer. I don't think you can. There are many other companies that know how to do it outside of Israel. So I don't think it's anymore only technology. And yesterday there was Forbes 100, the 100 strongest cloud companies. 8 were Israelis. This is a phenomena that we didn't know before.
Aviad, we'll finish with you.
We were
last
one as
question.
well, by the way.
Yeah. Most of the Israeli companies end up being acquired in an M&A by the large corporates. Very few go to the IPO. Most of them are being sold for the technologically excellence or the product that complement the multinationals, but not because of the revenues or the growth factor. How do we change that and make our companies more IPO ready?
So I think that currently there is a wind of change. Rafael mentioned it. There are more and more big independent Israeli companies, and I'm very happy to see that. Rafael company is one of them, but there are many other companies that are focused not only on a quick exit, but to build a big, independent, sustainable companies. I think that the mindset and the skill set and the capital found itself, or all these factors found themselves in Israeli ecosystem, technological ecosystem, and it's one of the drivers for the current status.
Okay, when I told my daughter I'm having a unicorn panel, she thought something very different about the excitement. I think Tomer, Rafael, and Aviad, you meet the challenge to create an interesting unicorn discussion that my daughter would enjoy listening to. Thank you very much.
Thank you.
Thank you.